Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr at the Gold and Silver Club. So welcome everybody. We have a lot to cover during today's session. We will of course be going through live market analysis. We will be providing you with a watch list of trading opportunities. We will go through a forecast of where we expect gold, silver and oil to be heading next. And of course, we will be answering questions and providing live support. Just before we get started, guys, a disclaimer for you to read, and then we shall go through our main analysis. Okay, brilliant. So before we get started, let me also introduce you to the Gold and Silver Club. Now, I'm sure a lot of you are aware of the Gold and Silver Club, but if not, the Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and of course, it's a pleasure to be here as well on binary.com. For further information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.thegoldandsilverclub.com. Now, before we go into the charts, I'll just take a bigger picture view of the markets, how they've performed over the last week. And you can see, in contrast to last week, where we saw red across the board, this week has been very much an up week for a lot of markets, particularly commodities. You can see here significant gains in a number of commodities. Overall, we've got a lot more green here than we have red. The best performers over the last week have included cocoa, palladium, copper, silver, gold, platinum, also Japanese yen, and as well as that, we've seen movement over the last few days here, WTI crude oil, Brent crude oil, and we've seen movement to the downside on the US dollar, just down under 1% overall for the week. Sugar as well, wheat and coffee have seen some dips over the last 7 days here. Now, if you take that in mind at the moment, in terms of the overall market conditions and what we've seen in terms of gains on the commodities, now, a lot of this move was actually, excuse me, off the back of the FOMC statement on Wednesday. Now, essentially, on Wednesday, what we saw was the Federal Reserve go ahead and they increased interest rates. Now, I had a lot of questions about that, and the main question I've been getting is, why is it that when the Federal Reserve, when they went ahead and increased interest rates, why didn't the dollar go up? Why didn't we see gold, silver, and a number of other commodities go down? That would be a very good question, because logically that is what you would expect. However, what you need to bear in mind is a lot of this move has been priced into the market already. It was telegraphed already by the Fed over a week ago. In fact, 2 weeks ago, it was telegraphed by the Fed that they were likely to go ahead, very likely, in fact, go ahead and increase interest rates at Wednesday's FOMC statement. And as a result, we saw a 50% correction in gold, over a 50% correction in silver, all of this happening prior to the interest rates actually going up. And this is a case of selling the rumor, and then once it actually gets confirmed, buying the news. And I'll talk you through that when we go over to the charts. We've had a number of major news items which have moved the markets this week, which has included the Dutch elections, the FOMC statement, of course, which is on Wednesday, which was on Wednesday. And over the rest of this month, we have the UK triggering Article 50 and Brexit beginning later on in March. So we've got still some volatility ahead, definitely more opportunities. Also, as we go into April, we've got the French elections, ECB meeting as well. In May, we've got OPEC. We've got a lot happening in the coming weeks here, a lot more opportunity. So we'll just have a look at the major news items which are coming out over the course of today. Really, that includes Michigan consumer expectations, which is in approximately about 25 minutes or so. That will create some volatility for the US dollar, for gold, for silver. We've also got the Baker Hughes oil rig count, which is coming out a little bit later on at 6 o'clock London time. We've actually gone through a lot of the major news items this week. The real highlight being Wednesday's FOMC statement. So over the course of the next hour or so, we've got a little bit of volatility with the Michigan consumer expectations, but overall, we should be in for a relatively smooth ride here with a number of markets, which we'll have a look at shortly on the charts. Now, the type of trades we'll be having a look at today, we'll be looking at the higher and lower type of trade. Now, this is a very straightforward way to trade commodities. There's a few reasons for that. So number one, you don't need a stop loss. You don't need to work out where your exit point would be in the market, and you don't need to put a take profit on. So from that point of view, all you need to predict is the overall direction of the market. You need to get your entry, your timing right, and you also need to get your exit right as well. So for example, if you predict, we've got an example here, the gold price to be higher by Monday close, very straightforward. You just go here, select the metals when you're doing this type of trade, up and down trade. You would look for the price, for example, 1230, $1,230 per ounce, which is where gold is actually trading at this point in time. And then you could look for either a higher or lower type of trade. It's all very transparent. You've got your payout, your input in terms of your payout, and also your stake on the trade. So for example, going for a higher trade here on gold would be a stake of $2,705 for a payout of $5,000, all very transparent. And also, if you look for the price to go lower, you would look for a stake of $2,903 for a payout of $5,000. You can see what the overall return percentage is, your overall net profit on the trade. So these are the sort of trades that we like to capitalize on binary.com, higher and lower type of trade. And again, all you need to really get right is the overall direction, whether you think the market will go up or down. You don't need a stop loss, you don't need to take profit, you just need to get the time right. So you need to get your entry right and also your exit right. How long do you think the market is going to go up or go down? And we'll talk you through that, our own analysis and what we expect to happen as we go over to the charts. So with that, I will go over to the charts. We'll start off with gold today, and I'm just going to bring up my screens to share my screen with you. So if you could just confirm that you can see my screen okay once I do this, that would be ideal. So you should be able to see my gold screen very shortly. In fact, gold is on the move again. So just a quick check-in. Yep, perfect. Thank you, Sharice. Excellent. Okay, good. Right. So first off, to give you an idea of gold right now, my view on this market, I'm long gold at the moment. So I've been buying gold over the course of this week since we got a breakout on Wednesday's FOMC statement in at $1,212 per ounce on this market. I am looking for the momentum from FOMC statement to continue throughout today. That's important because I'm looking actually to be out of this trade in the short term by the close of today, ideally. We might get a bit more follow through on Monday, we'll have to see. But ultimately, I'm looking to take advantage of what is typically a 48-hour move after an FOMC statement. So normally, once the FOMC statement has been released, you get over a 48-hour move from, especially when there's been a big impact to the market, which is certainly what we saw on Wednesday's FOMC statement. You have to remember there are 8 FOMC statements every year. 4 of those, there are press conference afterwards. Those are the biggest, highest impact ones of the year. They are in March, they are in June, September, and December. Okay, those 4 FOMC statements during the course of the year are the biggest trading opportunities to generate profits in a very short period of time. And now you can see here overall, just actually prior to Wednesday's FOMC statement, you can see where gold was just sitting precariously at the lower end of this supportive channel. We were sitting around $1,195 per ounce, which represented the 50% retracement level, looking at the lows going back to December, the highs here going back to the end of February, where we saw gold hit the 200-day moving average. It's corrected 50%. It's held that level so far, and at this point in time, we've had over a 300-point rally, or $30 move here for gold. In fact, a little bit more than that, about $35 move since we came down to lows, which was about approximately $11.95 on gold here. So right now, I'm looking for short-term momentum to the upside. How would I take advantage of that? On binary. We've already got some trades on binary for the price to be higher by the end of today. But essentially, what I would look at from this point of view is the price to be higher by the close today. That's what I'm looking at the moment, or be in and out on a quicker basis. That's not a recommendation. That's just what I'm looking at the moment on this market. I'm looking for gold essentially to go higher over the course of the US session today, in and out of this trade, and then out by the Friday close today, and then get ready, get neutral, and get ready for the next move next week, because I see a lot of potential overhead resistance at the moment around 1236. Now, this will change if next week or even today we can break and close above $1,236 per ounce. If we break and close above that level, it does set the stage here for gold to rally higher and revisit 1,264 US dollars per ounce here. So just to be clear, I see resistance at the moment in the short term at 1,236, around this zone. Okay, that's the level I see resistance right now. If gold, so I'm looking, essentially, I'll show you another chart. I'm looking for gold to do this. So I'm looking for it to come back up to the upper end of the retracement channel, create a lower high here, around 1236 on the chart, find resistance at that point, roll over and break back down again. That's my overall view right now, but it's contingent on confirmation. So if gold does manage to break and close above 1236, either whether it's today or whether it's next week, that would then open up the price to go higher here, back towards 1264, in which case I'll probably take a fresh trade on a breakout of that level. Now, one of the reasons where I'm hesitant to stay in gold too much longer at this point in time and ideally want to be out by the close today is because of the US dollar index and what that is doing right now. The US dollar index broke down significantly over the course of Wednesday's statements, quite oversold at the moment, broke down again yesterday. Normally, the US dollar index, during an FOMC statement, if it does break down, it follows through over Wednesday, Thursday, into Friday, but then it retraces and starts to rally into the Friday close, which then creates pressure on commodities, most notably gold and silver, which have the strongest inverse correlation to the US dollar index. So gold and silver, the way that we trade it, they're priced in US dollars. And therefore, if the US dollar goes down, gold goes up, and if the US dollar goes up, gold goes down. Now, the correlation, the inverse correlation at the moment between these two markets is very strong. So it's very clear. US dollar breaks down significantly over the course of Wednesday. Gold breaks out significantly as well. US dollar breaks down yesterday. Again, gold broke out to the upside. US dollar today is pausing. It is also noteworthy that in terms of Fibonacci retracement levels, we've come back down to the 76.4 level on the US dollar index, taking into account the lows at the end of January, the highs here at the end of February. So we're at a point where the US dollar index could still resume its upward trend if it holds this level here. It's also sitting right at a monthly pivot, and it's got some support at this level. So if the US dollar holds at this level and starts to retrace, it has the ability to then continue with its overall upward trend, putting pressure on commodities. But on the flip side of that, if the US dollar gives way and if it breaks down from support, we could see another wave lower here, and it could break down as low as the 200-day moving average. And I would see that being a catalyst also for gold to come up and hit its 200-day moving average as well. And essentially, I would see gold then hitting 1,200 and about 63 US dollars per ounce only if the US dollar keeps breaking down. Okay, it's contingent on the US dollar index breaking down. You can see at the moment from my indicators that the US dollar index is in currently an oversold condition where it could bounce higher here, but it's a bit of a make or break day for the US dollar and also for gold. So short term, I'm bullish on gold. I'm looking for more follow through today. I'm waiting for closes on the daily chart for confirmation. Also, gold euro tends to lead gold versus the US dollar whenever there's a disparity between the two and you're not sure which one is going to go up or down. Usually gold euro is the one that gives us the clearer signal as to what is going to happen. And at the moment, gold euro has started to stage a nice rally over the last few days here, but it would also come into some resistance. There's a bit of a concern that it produced this big inverse hammer into the close yesterday, and really what gold versus the euro needs to do is break above the 1150 zone. If it breaks above that level, closes above it, then, which we're not too far away from doing, then gold should be up and running as well, and we could see further upside. So I'm looking out for the correlations as well at the moment on this market. Now, if we break it down a little bit further, we can study gold a little bit more on the higher time frames. So gold right now, it's done what it needed to do in order to hold this overall short-term upward trend, which we've got right now over 2017. So far, if you're really on the side of the bulls at the moment, you can argue both sides at any point in time. We could argue for buying this market. We can argue for selling this market. Right now, technical control is on the side of the bulls, the buyers, but there is going to be a challenge and a battle at this point as we come towards the daily close today and over this week as well. The reason being, there's a few points to take into account. So far, swing low to swing high, we've retraced just above the 50% Fibonacci level. So we're holding that level right now. That is positive for buyers of this market. So the bulls in this market, that is a good sign here, and we can try and get some overall trend channels on here. And you can just argue, we come back down to the lower end of the trend channel, we're going to get a resumption of the upward trend, we're going to come out and break above the swing highs of 1263, and we're going to lead to the next significant breakout higher. That's certainly one point to consider, depending on how we close the week and whether we get follow through next week as well. The other point to consider is at this point in time, there is still major overhead resistance here. If you go over to the closes, and we're still stuck within this overhead major resistance channel, which formed going back to Brexit last year in July 2016. And so far, that rally has been capped by coming up to resistance. And what we might produce here is the potential for a right shoulder. So this could be a head and shoulders pattern on gold here. So we might just produce a right shoulder and then go to lower prices, ultimately breaking down and coming back down again, breaking lower before going higher again. So this area here, we would really need gold to break out at 1263 here in order to follow through and break out to 2017 highs and break out to 4-month highs here. It needs to follow through more. At the moment, this could just be a short-term retrace with a lower high, and then essentially you could see maybe a rollover breakdown, form a head and shoulders pattern, and then get a more significant breakdown off the back of a US dollar rally here. So it's just something to bear in mind. So I'll give you both points of view at the moment. Short term, I'm bullish. I'm looking for momentum to the upside. We've also got uncertainties coming up towards the end of this month as well. Of course, with the UK, or the UK just going ahead and triggering Article 50 later on this month. That could be actually the catalyst which does move gold significantly higher and means it will break through 1,263 US dollars per ounce here. So there are a few different factors at play at the moment, and I would suggest that we need more confirmation. Short term, I'm looking for upside on this market, but just don't get too carried away at the moment with gold. For those of you who like trading gold, who trade this market often, just be a little bit careful, be cautious, look to be in and out. I'd say on a shorter term basis at the moment, look to just take advantage of these nice moves that we've been getting since the FOMC statement, breakout higher, and be aware that the 1236 zone, we are likely to come into significant overhead resistance at this level. Now, if we move over and also have a look at silver, we've got a similar situation here on silver as well, where silver's come back down towards actually its major retracement level as well. So it actually corrected over 50%, corrected down to the 61.8 Fibonacci retracement level, which it is able to do and still maintain its overall upward trend. It hasn't broken and closed below the previous swing low going back towards the end of January. So it is holding here at the lower end of the trend channel. And so far on silver, had a good pop on the FOMC statement, broke out higher yesterday, closed with an inverse hammer, a bit of a retracement, but so far we've continued to find support here. So again, I perceive this as today being quite an important day, and also next week as to whether we will get additional follow through or whether we'll start to break down and roll over. And that will be dependent, in my opinion here, on the strength of the US dollar here, because it is at a key level of support. The US dollar from here could either rally and provide pressure on a number of commodities, particularly gold and silver most notably, or it will break down and it will come back for a retest of the 200-day moving average, which would lead to a breakout on gold, silver, and a number of other commodities as well. Okay, so overall, silver looks interesting here. My preference is gold at the moment. The price structure is much cleaner. It's been quite a significant decline actually with silver over the last couple of weeks here. It's corrected 61% of its overall gain here. So if you can imagine, if you've been buying silver at the end of January, and you've been a buyer, let's say around this level here, so around the $16.75 level, okay, if you had bought silver at that level and you hadn't taken any profits, you just stayed in the duration of that trade all the way to the end of February and beginning of March and hadn't taken out any profits at all, hadn't managed to capitalize on that, or banking profits, I'm sure those of you, if you were trading silver, you would have done so, you would have come out of profits. But just to give you an idea, over the last 2 weeks, silver has given back 6 weeks worth of gains here. So it's broken down quite considerably over the last couple of weeks, which is why you need to be fairly nimble in these market conditions. Take profit when it's been given to you. Don't get too greedy. Just take profit when it's available, and also don't be too fearful. Take advantage of markets moving in both directions. Sell when it's appropriate to sell and go for a sell short, and buy when it's appropriate to buy as well and go long. Now, moving over to oil. Oil is also looking quite interesting right now. We are at a bit of a junction here with oil. Now, I'm sure a lot of you are aware we've been selling oil. We sold it from this consolidation, this breakdown in price here. In fact, let me just remove one of these indicators on the screen here, see if we can change that. Just a very quick check in, guys. You can still hear me okay. I believe we just lost the sound. Yep, perfect. Okay, good. So just for a quick recap there, we are on oil at the moment, and we took this sell short last week where we took advantage of this breakdown in price all the way down to the lower end of the trend channel here. We were a seller of oil. Finally, we had a resolution. In fact, that breakdown of oil, it was a 9% move to the downside within 3 days. Very significant. This is very typical of any market that continues to consolidate for a long period of time, where oil had been consolidating for 3 months since the beginning of January right until the end of February here and going into March as well. Actually, we've been consolidating since earlier than that point, right since the beginning of December, I should say. It's been exactly 3 months. We consolidated until we finally got a resolution and we broke below support here. So we took advantage of that pressure to the downside. And now what we're looking at here, in the short term, there could be the potential for a retracement. And what I mean by that is we could get a move higher back towards the 51 zone in the short term before we then come into some selling pressure, and potentially we will see more downside yet again here. Or we will follow through and continue just to ricochet between these trend channels and continue to see oil move very clearly between these zones. Now, if we go over to the daily chart, the daily chart, we got a spike low earlier on this week. You can see here, in fact, we've come all the way down here, spiked with a strong rejection candle right at the 300-day moving average. And at this point in time, we have seen a retracement. We've seen higher highs, higher lows. We've been retracing since that point. This is a bit of a capitulation here as well, where traders are obviously taking profit from their sell shorts. And we've also seen some traders take advantage of the retracement and this bounce at the moment. Right at this point in time, it's still a bit undecided because of the way yesterday's candle formed as to whether oil is going to be able to follow through here. So whether we can actually get a higher retracement, whether it does manage to break higher here, I would perceive oil as having the ability to follow through and break out higher if we get a break and a close above the 50 zone, okay, 50.20 to be more specific on oil here. If we get a break and a close above $50.20 per barrel, I would look for a move all the way back towards the 52 zone. It has the potential to snap back quite quickly because there's quite a lot of clean air between these levels, where you've also got a previous level of support could then become resistance, at which point we would need to assertion whether we would see a retracement lower again if we see just a breakout to that point, and then just sellers come back in, they sell into rallies, or whether we would have any sort of further follow through here and start to get a significant rally in the weeks to come. That is one view that we could look out for. The other view is we formed a rejection candle into the close yesterday. It wasn't really a very convincing follow through. Today, we're not really seeing too much movement on oil so far. If we breach below yesterday's low and close below that low, it gives oil the opportunity then to go for another wave lower and retest the lower end of this zone trend channel and take it down to approximately 46 to 47 US dollars per barrel. That is definitely a possibility here as well if oil takes out yesterday's low. So we could see additional follow through to the downside. So essentially right now, a little bit neutral on oil here, waiting for a resolution. Again, if we break below yesterday's low here and we close below those levels, particularly if we break and close also below Wednesday's low, so if we close essentially below the $48.78 per barrel level, I'm looking for follow through, taking oil back down to the lower end of this trend channel. That will be a sell short for the price to be lower. And if we break above resistance, so if we break and close above $50 and about 28 cents per barrel here, we would look for continuation pattern that you can just go for. I would be looking for the price to be higher in a shorter duration of time, just to break out and follow through, taking it back towards previous level of support, which would likely then become short-term resistance here as well. So that's a view on oil at the moment, really waiting for a bit of a resolution on this market. Right now, I see the best opportunities, in fact, on gold. Silver looks interesting, but I see the best opportunity on gold. I'm looking short-term for follow-through here, so essentially a very short-term trade. We've already entered into positions earlier on this week off the back of Wednesday's FOMC statement, but I'm looking for a breakout towards 1236 to 1,236 US dollars per ounce here, and then once if we do hit that level over the course of today, it gives us an opportunity to then get ready for the next position next week, depending on whether this is a level where we find resistance for gold or whether it can follow through, break above that level, and then essentially could give us another opportunity next week just to take advantage of another breakout higher here if we can break and close above 1236. Okay, so this is what I'm ultimately looking for. And again, just to take you back to my charts on the daily time frame, the more raw charts here, overall, this will be a major event area, okay? At the upper end of this channel here, this is a make or break area in the short term for gold as to whether we can either get follow through, break above this zone, close above it, and get a retest of the highs from 2017 so far, or whether we will run out of steam at the upper end of this trend channel, roll over, and then break down, and in which case, if we see confirmation to go short, we'll also sell short here. So that's what we're looking at the moment. Now, if you did like today's analysis, guys, and if you'd like to be kept updated during the course of the week, not just on Fridays, but if you'd like to join our trading rooms during the week and also get kept up to date with every single trade that we're taking at the Gold and Silver Club real time, so you get the alerts of every position that we're taking, our entry or exit on every trade. If you'd like more, just go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. And I, of course, very much look forward to working with those of you who will be making an application to join us. So I'll just put that link there into the chat for you. So it's www.jointhegoldandsilverclub.com. By being a member of the Gold and Silver Club, you get access to the following. You can log into our private members academy. You'll be given your own individual login, so you can log in to our membership site where you can go through all of our trading strategies, all of our online training course. You get access to our weekly live trading rooms during the week. You also get access to recordings of every single session we are doing. You get live trade setups ready to implement, real-time notifications so you're not missing out on trades, details of where we're entering, exiting trades, the inside track, so a week ahead trading plan every single weekend with a watch list for the week ahead, VIP support and mentoring directly from our senior traders, and you get access to our private traders academy members website, which has a whole host of resources. So again, you can join us for the live trading rooms during the week. If you like today's session, you can join us more frequently during the week. You also get access to all of our notifications with the exact trades that we're taking, and you get access to all of our resources on our membership site, which also includes our commodity research, so you get access to our exclusive proprietary research and market insights as well. So you get all of that by being a member of the Gold and Silver Club. Okay, fantastic. So again, it's just www.jointhegoldandsilverclub.com. Okay, fantastic. So I wish you all a very profitable afternoon, guys. All the best. We definitely will see you back here for the next session. Thanks again to Sharice and Binary.com and the team for hosting today's event. And yeah, I wish you all a very profitable one. Okay, and look forward, of course, to work with those of you who will make an application to join us. Okay, thanks, guys. We'll speak again real soon. Okay, take care, everyone. All the best. Have a great weekend. Cheers. Bye-bye.